to become a master trader, you have to get your own discipline under wraps, meaning that the keys are going to be following strict rules. As soon as you kind of go outside of your box, of your disciplines, that's where the market ends up eating you alive. So always remember, discipline, personal discipline when it comes to trading is paramount to success. The second thing is understanding human psychology. And this comes in where, many people were buying Bitcoin at 65, 67, $69,000. And obviously that was the wrong time to do it. They were doing it because they saw everyone else doing it. One of my biggest principles is when you see everyone else doing it, you do not do it. In fact, step back and it might even be a good shortable opportunity. The charts are basically representations of human emotion. You want to be the casino, not the gambler. And what I mean by that is that where in the momentum cycle are you? And to me, that's a risk that I'm not willing to take with the money that I continue to make, and it's hard-earned money. So I always say this to people is, you're making your dollars, we're working hard to make money, and that would be something that would catch my attention because that's usually institutional volume, right? But I think that, again, the institutions already have that edge. And obviously you have institutions that they have information slightly quicker than the general public because we do not tune in quite as much as they do. But overall, they can still buy and they sell. It's supposed to learn and adapt. And I think the biggest issue there is, right, but the idea is, could this bring financial Armageddon? What if all these algorithms, what if there's a bunch out there, let's all dump at the same time? Does it then create a potential for a stock market crash? There needs to be safeguards put in place. There needs to be rules. And this is the new frontier, something that an Elon Musk is working on that could make someone much more advanced than they normally would be, or algorithms that can trade and really, squash the little investor. It's definitely something the regulators need to be on top of right away. I had to go through years of learning, losing money, making bad decisions. It was either something was running up and I felt like I was missing out, so I jumped in. And of course, like everyone else, you jump in, generally it's going to be towards the all-time highs or the high pivot of that before it sells off. I was panicking and I was dumping at the absolute wrong time. So believe it or not, you actually want to be more robotic. You need to control your emotions as a trader and look to the logical chart statistics, the probabilities. I mean, again, we all know what happened during the Great Recession. What if one seller had a bad day and this person that owned it was like, all right, I'm going to dump my 100,000 shares. That 100,000 would manipulate and drop that price significantly out of my control. So the first thing I look at is volume, making sure it's extremely liquid. No individual should have power to change the chart pattern. If there's no action, if a stock is trading sideways and not moving, why am I going to get involved in that? My goal is to be in and out quickly as a day trader, even as a swing trader. I want to find a level. I want to buy that level as the stock is collapsing into it, and then watch for that snapback bounce off of that technical support. So again, as a trader, it's a very different mindset than a long-term investor. You want to go long, so stock makes money, they pay a dividend. Over 10, 20 years, you'll do fine. For me, yeah. So the thought process is this. And one of the things, and we talked about this at the beginning, is I'm always analyzing the mental psychology of the makeup of investors. And there was so much hype around this. It was going to change all the average investors. So hype was number one. I was noticing it made me very uncomfortable. The same sort of hype that I saw in the late 90s, early 2000s when the dot-com bubble was going to burst. The same hype we saw in housing in 2007 before it collapsed. So that's the first thing. I was on alert. This is something I teach in my course, the Winning Trader series. Notice how you closed above the high and then you reversed. And then you closed above the high here again. It tried to break out again and you never got a higher close. And to me, that was telling me institutions were dumping into it. I mean, same thing with brain surgery. If I had the ability to learn this stuff, I would have cut my learning curve by an enormous amount of time, years. And I would have had, at this point, I'd have so much more money than I do right now. The market makes you pay, or you pay for education. The route of education is always the cheaper method. All right, and that's so important to understand. Yeah, so and this is so important, folks, is that number one, you want to start with a amount in a trade where there's no emotional attachment. The idea being is if you get in a trade and your heart rate's going nuts right away, you're too emotionally attached to that amount of money. And you have to start small. As you get more confidence, as you learn the chart, for those of you that are baseball fans out there, think about the best home run hitters in history. I grew up in Boston and then in New York, obviously, but he was a singles and doubles hitter. and he got to the Hall of Fame. I'm not looking to 10x my account overnight. I just want consistent winners at a high percentage batting average. And one of my biggest faults in my trading, and this is something I'm always actively trying to remedy, is that I see the big picture, and I'm good at that. And you guys that watch my interviews, you know that I can tell you, okay, this is the likely outcome. I was talking to you about how much I love China. Now, granted, they've all ripped higher since then, and this is something I've learned, and this is the most important thing I will say, is make sure you don't put all your eggs in one basket, especially with the price of eggs these days, right?
It's interesting you brought up China.
And in fact, they go hand in hand together. Bitcoin's leading, obviously, since the start of the year. The S&P, I don't think quite is at this point, since gold's had a pretty remarkable move to the upside. So if we get in a little low-level recession, which is where I think we're going to go by second half of 2023, the Fed's not going to be rushing to the aid of the market because they remember it. And so, again, that means the stock market is going down. I think it's got a huge future, but you still have some stuff that have to be sussed out here in Bitcoin, including regulation, including flushing out a lot of these hands. In addition, you have to also remember that the Fed, this is the first bear cycle the Fed is not printing money. And so these are the things that you want to pay attention to. So you're looking at going back to 16,000, and that's been the way it has been since 2009, right? And I think that's something investors have to remember. And everyone kept saying, don't fight the Fed, don't fight the Fed. You know, the Fed is telling you they're printing, they're printing, they're printing. That was the right move. We want to make market, we want to make money, but just keep in mind, if you weren't supposed to fight them on the way up, are we supposed to now fight them on the way down? And I think that's a great point. And it's not, you know, and like you said, it's a bear market now induced by the Fed where they're actually sucking out liquidity. And granted, the Fed will stop hiking. Silver making a bullish pattern of consolidation here. Please understand, this is one for the next month or two, but I continue to be long natural gas down here. Natural gas, again, it was all pumped up here, but if you break above this trend line on the EWZ, the Brazilian stock market ETF, this could be a major breakout. And just think about this. If this market just goes back to its highs from 2008, just its highs from 2008, you just actually sometimes have to look a little bit harder. In bull markets, I would probably adjust slightly, but I do think that what I went through made me the trader that I am today, and I think it's kept me humble, right? And so you have to always stay humble, be always conservative, and just understand that every day is a learning experience to continue to learn going forward.